Good afternoon, this is Giuseppe Basile. I'm the trader and analyst, and you can find me at the blog www.fibonaccistalking.com. And today is Sunday the 7th, October the 7th, 2012, and it's 6 p.m. Italian time. Now, I wanted to do this brief weekly review of the USD CAD, the US dollar versus the Canadian dollar forex pair, and I want to start from this weekly chart and see where we are with price in regards to this pair. Now, as you can see, this pair has been going down for now basically 12 years, maybe 10 years, and here we had this huge measure move lower into the 126.15 area, and this move, let's say this short setup on the bigger time frame, is pushing this pair downwards. And in the last 2 years, we saw this measure move lower, which came at 108.30 area, and it hit the first target at the 0.9495 area. We had a double bottom here. I would have no means to define this double bottom, but I just see here that we hit resistance, and I believe we are in a sideways move at the moment, which just lasts from the first part of 2010. And as we can see, the next measured move lower failed, so somehow the bulls won here when they claimed price above 103.10 area. But it also happened the opposite, that when they had to confirm their strength, they were not able to do that. And as we can see in the next measure move higher, which would have confirmed the continued move higher, the bulls were not able to sustain price, and the bears were able to push price below the 98.90 area here. So when we have this, we know we are in a wedge, and we are in a wedge in this big time frame here. And the wedge, as you can see, has already decided where it wants to go. The wedge wants to go down, and there are very good reasons for this. And the reasons are that we are into this big move lower, having targets well below 0.90 here. So the wedge broke lower, and let's see what can happen in the let's say in the higher time frame. I don't have it here, so I apologize, just need to load the daily. Here we go. So we have the wedge here. The wedge broke already. It has broken already, and what can happen is that we're going to maybe retest this trend line from the downside. I don't trade trend lines. We can remove this one. I don't trade trend lines, but measure moves somehow line up with trend lines, as it could be happening here. So the US dollar versus the Canadian dollar will be bullish if the dollar is bullish. So as you know, at the moment I believe the dollar is still bullish for the next 2 to 4 weeks. We don't know yet. And as you can see, this pair defended, the bulls defended all the way from back, and the 50 back into the 0.9760 area. So as this bullish candle would suggest, but I don't trade candle formations. We are probably going to move higher and we could move into the 0.99, 43, let's say 40 area in the next week if the dollar keeps going higher. And it's very interesting to notice that the second target is aligned at 1.0040. It's aligned with the next move lower, and aligned with the retest from the downside of this trend line here. That's not very interesting. I mean, you could remove this trend line and keep trading using the measured moves here. We don't need a trend line, but it's very interesting that we have this level which is lining up with a bigger resistance here. So I wouldn't expect this pair to go much higher than basically than the parity. So next week I'll expect this this pair to keep moving higher into 0.9940 area. I hope this is interesting, and I want to remind you that you can always find me on the blog. Just put your question if you have, and I keep publishing on my blog reviews on the euro dollar, but other pairs as well. If you want to receive analysis that I usually don't publish on my blog, just subscribe my newsletter and you'll get also other interesting analysis and information which can help you to successfully use this method. I hope this is useful, and I wish you a great Sunday and a great week, and all the best. Bye bye.